In a system that just ain't right, gonna tear it down, gonna start a fight. Anarchy and numbers is my game. I'm the investor with no shame. Greed and corruption, that's the name of the game they play. It's all a shame. I won't play by their rules, I won't comply. Anarchy's the way. It's time to fly. I burn down the walls and break the chains, shatter the illusions, expose the
And here we go. Welcome. I am Matt. This is the Anarchist Investor live, coming at you every Monday through Friday at 12 Eastern, talking about contrarian investment, markets, the economy, how to protect and grow your money without getting it stolen by some dirty, dirty Wall Street banksters. So that being said, what are we looking at today? On the hold screen today, I had gold. Oh, I love gold. Gold is continuing to show strength here. Pulled back off of all-time highs, and a lot of people talking about it. In fact, some people got snake bit by it, believe it or not, because it hit the all-time highs and pulled back. And typically what happens with gold and silver and some of these things is, again, the reason why I say we're contrarian investors is because we look at things when people aren't looking at them, or at least when the masses aren't looking at them, because that's where the value is found. That's where the undervalued things are that we can put some of our time and our energy and our assets towards to realize gains and grow over time. Well, gold typically gets a lot of press when it hits all-time highs, and what you get is a flood of lay people that just kind of, rush in and they buy up a lot of the physical supply because, oh my God, right? Like FOMO, it's going to the moon. And then that's typically when some of the more educated investors use that as what's called exit liquidity to be able to liquidate some of their stack or some of their position. And then what happens is those newbies swear it off for the rest of their life, or at least until it hits a new high again, because they immediately got bit. Okay. And they also bought during the very worst possible time, because a lot of times when the physical demand is high, the premiums are high too. So you're not just paying a high spot price, you're also paying a high premium, a high VIG above that, because the dealers out there have to protect themselves from the float of the price of that metal. And so they have to make a little bit of money, and they want to protect the amount of money that they're going to make and not have it just eaten up by a daily price fluctuation. So if it's moving a lot, if there's a lot of volatility, those premiums are high. Those newbies get bit by not just the high price, but also the high premium. And then all of a sudden, if it pulls back like it has, a few percentage points, now all of a sudden they're swearing it off and it's the worst thing ever and yada, 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 yada. Well, guess what? If they have done that, they are missing a gigantic opportunity. If they did buy in at the high, then they'll be able to take advantage a little bit of this opportunity. But again, they will have, bought at high premium. So gold has to run a ways before they're even profitable in terms of that position. Now, a disclaimer, I do not advocate buying gold or silver to get wealthy. Okay, that's not the goal. You buy gold and silver to preserve wealth. It's insurance. Okay, which is part of the fundamental picture that we'll talk about here as to why gold specifically, but gold and silver have been strong, and I believe will continue to be strong into the future. All right. We're also going to do a little bit of technical analysis too. All right. A reminder before we get going with that, make sure to help me out with the algo. Give me a sub, a like, an upvote, a share, a follow. Throw it into the comments. Let me know what you're looking at. Are you buying gold right now? Are you buying gold, silver? What are you buying right now? Or are you selling? Let me know in the comments. I want to hear from you, because that's the way that we get some good dialogue going and we can actually figure out maybe even some, better opportunities or some different takes on things by getting a little bit of a conversation going. So definitely do that to help me out. And I have my little Modus Mini. It's actually installed in the car. And for those of you who are unfamiliar, this is the branding will actually end up changing, because this passive crypto miner goes on your car and it helps build a database of basically driving data that then can be monetized using the crypto, and the crypto in this case is SOAR chain, SOAR. And so this branding will change to the SOAR Mini, I believe is what it will end up being. But the crypto originally was going to be called Motus, MOTUS, but it's going to be SOAR because it's on the SOAR chain. And this is a primary blockchain, but it has apps that's going to be built off the top of it, like car insurance, right? Decentralized form of car insurance that will allow you to purchase and maintain car insurance without having to pay huge prices because they're effectively using your data, and you should be able to capitalize on that, either in terms of discounted prices for things or in terms of getting rewarded for crypto because they're using your data to set insurance rates. Okay. And there's a whole host of other things too, such as, decentralized monitoring of maintenance schedules and all kinds of other stuff, road conditions, et cetera, et cetera, et cetera, traffic. So I will be writing an article about my install and my early experience here with the SOAR chain mini miner. And that you'll find that on the Anarchist Investor newsletter. So sub to anarchistinvestor.substack.com. And you'll also get in on my monthly drawings. This month, I'm giving away 4 one-year paid memberships to the newsletter. And that's basically $100 value times 4. So I'm giving away $400. We're like I'm growing the giveaways, and like the newsletter followership is growing. I don't know if I'm gonna be able to grow it at the same pace though, because the first month I gave away $100 in silver. Second month I gave away $200 worth of Bitcoin. This month I'm giving away basically $400 worth of paid annual memberships. So it's gone up, and you get in on it for free every single month that you're a subscriber, a free subscriber, and also some special stuff if you're a paid subscriber. On that note, I'm also going to be looking to put together a branded dashboard for like an Excel spreadsheet, but like a dynamic Excel spreadsheet to help people monitor their portfolio. And I was looking on Fiverr, and obviously I could go to Fiverr and work with anyone. But if you are someone who knows how to put together Excel dashboards, throw it into the comments or email me. It's buddhaballistics@proton.me, or get in touch with me some other way. You could even leave a comment on one of the newsletter articles, something like that. I would rather do business with someone who's within the community. And so if you do that kind of thing, I'm definitely looking at throwing whatever you would like at you. Bitcoin, silver, gold, whatever. We'll figure it out. But I am looking to put together a resource for, and it will be a free resource too. So not everyone will get access to the actual portfolio itself, but I definitely want to put out that tracking dashboard for everyone for free as a thank you for subscribing for free to the newsletter. So definitely hit me up if you're into that. All right, back to the business at hand, talking about gold. So let's do some very basic technical analysis here. Okay, we're not going to get too far into the weeds, but what we are going to focus on is more of a longer term look at gold. Okay, and so if you're listening, obviously you're not going to be able to see the visuals here, but I'll try and explain it verbally. So what we're looking at here is a weekly chart of gold futures, and it goes all the way back to 2011 and even a little bit prior to that, the 2008 Great Financial Crisis. All right. In 2011, we hit this peak after the Great Financial Crisis, and it begins this long period of approximately 9 years of just this huge dip in gold prices and then rally back to about, if not slightly higher than we were at when we peaked out in 2011, right? In technical analysis, there's a couple of different, like, quote unquote, formations, all right, like chart patterns that people look at. Actually, there's a lot of them, okay? The very most basic ones, though, there's like a handful. And one of the handful that is a very bullish pattern is called a cup and handle, all right? So it basically looks like a teacup. So you have the main part of the teacup, and then on the right-hand side, you have the little handle part, which is like a little nub, and then it goes up, all right? Well, right now, that 2011 to 2019, 2020 period looks like the bigger part of the teacup. From 2020 until present day, and in fact, maybe even before present day, probably about like earlier this year, February, March, the formation then put in that little handle part, right? So if you see this much more shallow handle part, which is also, if you zoom in on it, is also another chart formation that's very bullish called an inverted head and shoulders. Okay. So a regular head and shoulders is sitting above the line. It's like shoulder, really big head, and then another shoulder. And then usually it drops off. Well, here we have the opposite. We have shoulder, head, and then another shoulder. And it's basically hanging under the line of resistance. And then we'll see a much more powerful rise afterward. And what these patterns typically mean, like in terms of the market psychology as well as the mechanics, is this, in essence, you might say, oh, well, that's a down period, right? But really it isn't, because it went down, but then it came back up. This is essentially a liquidation period where people take profits. And then it's also a consolidation period where people that are still long-term investors that have a much longer time frame investment thesis than, say, a couple of years, they're given a long period of time to be able to build up a base of whatever the asset is. So in this case, it's gold. And so essentially this is a really big consolidation. All right. And then at the tail end of this consolidation is another smaller consolidation that allows the more short timers, the ones that are only looking to invest for, a couple of years, they then have this kind of consolidation period that they can get involved in. And if you notice, if you were consolidating, if you were buying gold back when it was consolidating at $1,200 an ounce back in 2016, the rewards that you reap are higher because you have to wait longer. There's more risk, right? Over that period of time, market dynamics could change dramatically. And so, yeah, you're buying in at 1,200 in 2016, expecting it to go higher eventually. But what happens if it takes 10, 20, 30 years to actually realize that? Well, that realization in that gain has to be worth it if it ends up playing out. And that's essentially what happens. The true believers are buying back here in 2016 at 1,200 an ounce, and they're buying for years. Some are buying at 1,200. It gets as low as like $1,000. Okay. And if you bottom tick that, dude, more power to you. You're like a purist. Okay. But this is a big consolidation pattern. And then it's followed by a much shallower consolidation pattern that leads to a breakout. And what this essentially means is these are all like the true believers. These are all the long-term investors that are concentrating their position in this investment. The breakout then brings all of the quote unquote hot money, all of the momentum type money. Think day traders, think short term traders, think hedge funds that only care about 1 year worth of returns versus holding something for 10 years. Okay. All of that like momentum type money then comes into play once you get that breakout above these consolidation pattern levels. Okay. The tops of them. Well, something that we can look at in terms of trying to predict, all right, how far can we expect to go here, right? If this does break out, it continues to go. It's already broken out, but how far will it continue to go? Is it done? Are we over with? Well, I did the initial analysis a couple of weeks ago looking at this inverted head and shoulders, which is turning out to be the handle of the cup on the right-hand side. And that analysis led me to believe that we were going to get up to approximately 2,400. Okay, maybe even 2,400 and change. And guess what? We topped out at 2,446, because that way, if you basically take a measurement from that neckline all the way down to the bottom of the head, it's roughly a 20 to 21% move. So now, if we take that same move and we transpose it and add it to the neckline, that 20 to 21% move gets us to roughly 4,300. I'm sorry, 4,300. I wish. That 21% move gets us up to like the mid 2,400s. Okay, which is exactly where we ended up topping out so far in this breakout. But now that's just the local breakout for this most recent move. There's also this longer term dynamic where the big part of the cup is then going to add demand and potentially thrust to this move forward. And so to get some concept of that, we go from the top of that move all the way to the bottom, and we get what amounts to about a 40 to 45% move. And so if we then take the top of the line and add that 45%, we're now looking at a price target of 27 to basically 2750, give or take. And I'm sorry, I'm cutting off the top end of this chart here. Let me redo that. So 40 to 45%. 40% move based off of this chart would bring us basically to 2700 even. A 45% move would bring us to the high 2700s, say 2780. Okay. Now, it doesn't necessarily mean that the move stops there. It's just that's like a good metric to guide you, especially if you are someone who you were this true believer that was down here buying at 1200, and we get to a certain point and you're like, okay, how do I pick a point to lighten up on my position where I think that gold might be fairly valued or maybe even overvalued? I would say right now what it looks like is 2700 is a good number. Okay. And again, all of this stuff is, I wouldn't say it's arbitrary. There's a logic to it. A lot of people will be looking at it this way. It's why technical analysis works. A lot of people will tell you, like, if they're more fundamental type people, that this is like voodoo. It's like, trying to read tea leaves and see where investments go. But enough people see value in this kind of analysis that a lot of times these things continue to play out consistently because those people that believe in it are putting money to work in a fashion that coincides with what that interpretation is. So I fully expect the gold move to keep going. And it's not just the technical analysis. You also have some fundamental reasons, part of which is essentially economic uncertainty, right? Like I said, I view gold as insurance. I look at silver as insurance and also an inflation. I won't necessarily call it an inflation hedge. I will call it a highly inflation sensitive precious metal. Okay. Whereas gold is inflation sensitive to a point, and it's an inefficient inflation hedge, but it is a hedge. But really, where gold shines is during economic uncertainty. Okay. And we can have a chicken and egg argument there because, is it the economic uncertainty or is the expectation that the Federal Reserve is going to fly in on the Ben Bernanke issued helicopter and rain dollars from the sky? Whatever. Does it matter? I mean, like, it just happens, right? Like, it is what it is. So, but from that standpoint, I think the case can continue to be made fundamentally for gold and silver to be strong here into the future. What are we seeing recently here? We saw the all-time high hit just above 2,400, actually just above 2,450. It's since pulled back. And so let's measure this move. And this move from the very high to the bottom of the move is basically a 6% pullback, 6 to 7%, which is a healthy pullback. We're not talking about a 20% pullback here. Okay. And so anyone who thinks that the momentum in gold is dead because it's moved back 6% is unfamiliar with how markets work. A 6% move is nothing. In fact, a 10% move still wouldn't be out of the question for an asset that's run a far way. It's taking a breath. Some people are taking profits, but then eventually it's going to resume that move. Okay. So right now we've only really come down 6-7%. So if you top ticked it, you bought literally the high in gold, you're down 7% plus whatever your premium was. All right. But in the grand scheme of things, in the grand context, that's not a big move respective to where I think, as I was looking at with the technical analysis, gold could end up moving to. Okay. And so keep that in mind moving forward. I think now, again, I never advocate for people to mortgage the house and buy one investment. Okay. I think you should value average in. If you're value averaging into gold and you have in the past, say you put $50 normally every single month towards your gold stack, maybe put 75, right? Like and again, I'm not a financial advisor. I'm just a schmuck on the internet that has an opinion that tells you what I do. Okay. You don't have to follow me. I have maybe a different investment thesis. I have a different timeline. I have different goals. Okay. But at the end of the day, I also look at things and I'll give you my opinion on what I think the value is. Doesn't mean I'm right. Okay. It just means that that's the perspective that I'm shooting out there. Well, right now, I would say gold still looks undervalued, especially considering the economic uncertainty we have coming up, and that continues on, especially considering the fact that I think we're on the eve of the Federal Reserve beginning to cut interest rates again to try and support a weakening economy. And I mean, those things alone are a tailwind for gold. Not to mention the fact that you have economic uncertainty, not just in the United States, but in most other countries, most other industrialized countries throughout the world. And so they're also buying gold. In fact, one of the biggest buyers of gold is also one of the biggest producers of gold, and it's been China for the last couple of years. Um, and a big reason there is their real estate market is falling apart. So where are you going to put your money to work, right? If you want to put your money in something conservative to preserve the value, the real estate market's a Ponzi scheme over there. You're not going to put your money to work there, right? So what else are you going to buy? You're not going to buy the yuan. I mean, you could buy it a little bit because it's actually been strengthening. But again, the Chinese government's already said that they're dedicated to keeping the yuan weak so that it can aid their export businesses, right? Their manufacturing base. So you don't want to put your money there. Where are you going to put it? Gold, man. Like, I mean, that's basically one of your only bastions. The only other thing would be, maybe Bitcoin or something like that. But again, I've told you, I think it's a conclusion that a lot of people have drawn that hasn't necessarily played out in reality yet. Bitcoin is more of a risk asset than it is a safe haven right now. Okay. Something also that I looked at the other day was I saw a report on effectively the leverage that's being used in the Bitcoin space. And I don't think that's being talked about enough here in terms of the price of Bitcoin at present and how much of that, specifically the market cap of Bitcoin, is attributable to leveraged bets on Bitcoin, meaning essentially just fractional reserve banking all over again, right? Taking $1 and buying $10 worth of Bitcoin. I'm not sure I've seen a good answer, so I'm going to continue to dig on that. I might actually end up writing an article about that later on here. But that being said, I think the future looks really good still for gold. And I would say $2,700 is a definite possibility here within, and again, these things don't necessarily happen overnight. Could be 6 months, could be 12 months, right? But again, I think the longer term prognosis for gold is still strong. It still has a bull case. And I think we're in potentially not just a bull market run for gold, but we could be in a bull market run for commodities. That being said, the overall commodities index hasn't necessarily had the same tailwinds that gold has had recently because of the uncertainty. You might see weakness in some commodities moving forward before we get to the Ben Bernanke helicopter with dollar bills raining down on the economy. Okay, so that's something to keep in mind. Anyway, all right, let's look around the casino, see what we see today. The casino was down moderately at the beginning of the day. It's since bought back, so there continues to be a bid in the casino, and that's because, like I said last week, the Fed signaled that they're easing. Okay, and they're going to be doing easing, whether it's the official psychological, trip of cutting interest rates at the Fed window, or if it's just some of these other programs and other kind of like machinations of monetary policy that they've been working on and off since the year 2000. All right. I mean, they're easing from all intents and purposes, from everything I see in the casino. That's what the big money is expecting of the Federal Reserve from now into the future. You'll continue to see a bid in the markets until the economic numbers become so obviously bad and corporate profits top out. That's when you'll see the big losses. And that's why I always say, and that's why a lot of people who follow markets from the past say that the biggest losses in the casino typically happen after the first Fed rate cut. And I've reclassified that to after the first Fed easing now, because it's not just rates that they muck around in anymore. It's also mortgage-backed securities in the U.S. Treasuries market and all kinds of other stuff. Okay, so something to keep in mind with the casino. Caught a little bit of a bid. Now, that being said, even though the casino caught a bid, the dollar also caught a bid. Strengthening dollar usually isn't great for stocks in this current environment, but the dollar's catching a bid relative to other currencies that are out there. Again, Japan continues to have problems. There's still currency problems happening in China as well as another number of other countries, right? And so you're continuing to see a lot of weakness in other countries in their currency, and more countries are beginning to have to intervene in their currency markets, which carries a whole other host of issues and economic impacts that come with that. I don't really follow foreign markets as much as I probably should, but that's probably another channel's business to be talking about. All right, what else am I looking at? Oil was actually down a bit today, and it's caught a bid here, but again, it continues to be weak. So something I'm continuing to watch is oil, because if oil continues to fall, it's not because supply is rising dramatically. It's because supply is remaining the same, if not falling a little bit. And at the same time, demand is dropping because the economy's weak. All right. That's what I'm continuing to watch there. If all of a sudden the Federal Reserve pulls an about face and starts cutting rates crazy, okay, and dropping them dramatically, you will see oil take off. But unless that happens, I would expect oil to still remain weak. Okay. It might not fall off the face of the earth, but it's also a very telltale sign of a bad recession if oil does fall off the face of the earth price wise. So again, keep watching oil. Let's see. Copper's weak today. Again, a lot of people have been pointing to copper in terms of its strength and how quote unquote resilient the market is. I don't buy it. Copper looks like it's double topped. It's dealing with some support lines that used to be resistance lines. We'll see if they can actually hold that price on copper, but I would not expect copper to be super strong here into the future, short of some, huge intervention. Lumber continues to be weak. What else am I looking at? Aluminum's come off a little bit from the highs, but again, the aluminum story has to do with tariffs and the US presidential election. So that will continue to keep an eye on. Palladium continues to be weak. Look at this chart. This thing, since the high in, let's see, March of 22, this thing's just getting destroyed. And if you're not familiar, like, palladium is a plating metal that's used in a lot of industrial applications, like plating electric, parts and components and things like that, as well as other machinery. I mean, this doesn't point to really good economic activity. And as far as I know, I don't think they've found huge deposits of new palladium in places. Okay, not enough to move the market in terms of a huge oversupply. Okay, again, continue to watch these commodities and hear people talk about hyperinflation. It's just not materializing. Uranium has caught a little bit of a bid here. So notice huge move in uranium, decent sized pullback. In fact, this was like a really big pullback. If I put the ruler up to the uranium futures chart, that's like a 22% pullback. Okay. Technically anything over 20% in most markets is considered a bear market, like downward trajectory. It has bounced off of that level, so it's not down 20% anymore. So you could say that it's still kind of quote unquote correcting. All right. We'll see what happens with uranium going forward. But again, I continue to take small little bites into the URA ETF, holding my nose, making a little bit of fee income for the dirty banksters on Wall Street. But again, if you know of a better way to gain exposure to uranium, let me know. Let's look over at fixed income really quickly. Fixed income today, the treasury market is kind of bucking the trend of the last couple of days. So yields are up for the most part. So there's a little bit of selling of treasuries. That's to be expected with treasuries. It's such a big liquid market that, if you get a couple of days of up, you get a down. If you get a couple of days of down, you get an up. Just, it is what it is. And people are making such huge bets, especially Wall Street firms and retirement accounts and pension funds and the like, sovereign wealth funds. There's so much large volume bets in this area that if it moves a certain direction for a couple of days, you usually get the opposite direction move very close proximity, because they've made a lot of money in nominal terms, right? In terms of they have billions invested, they made 50 million. And so they're trying to lock in the 50 million in profit, right? Or at least a piece of it. So the US Treasury market is kind of bucking the trend today, and it's up. Now, interestingly enough, HYG is weak. So again, high yield bonds came up against this resistance line again, and it looks like it's still trying to get rejected. This is, if you want to gauge on the zombie companies, quote unquote, zombie companies in the marketplace, watch HYG. HYG is the high yield corporate debt. These are the companies that have bonds that cost a lot in terms of the coupon payments and basically the interest rate that they have to pay to borrow money to keep their operations going. Keep watching this ETF, because it could potentially turn south in a big way. And that would be at least coincide with, if not be the precursor to the casino finally popping. And you'd probably hear an audible, loud popping sound if that happened. Bitcoin is flat today. It's kind of been back and forth a little bit. Some weakness recently, the last couple of days. The trend continues to be this pullback from the all-time high in Bitcoin. And I mean, me personally, I think you have more weakness to come because, again, I think there's this magnet that's kind of pulling Bitcoin down to these trend lines at basically 54,000 to 52,000 in that range. If things get really bad economy wise, you might even see a pullback to say like 46 or 40. Okay. But what I'm targeting or what I'm expecting is a pullback to 54 or 52,000. All right. Again, I'm not a trader, but as a value average guy, I would be inclined to increase my monthly stack of Bitcoin when it gets to say like 54 or it starts approaching 54,000. Still looks like it's weak. All right. So we continue to watch Bitcoin and see whether or not it continues that move lower. The rest of crypto marketplace is kind of like mixed today. I don't see any like huge outside moves. There's outsized moves. There's like, a couple percentage points this way, that way. I definitely talked a lot yesterday about privacy coins. So Pirate Chain still continues to get a bit of a bid, especially following, things that happened with Roger Ver and, some of the other news that's come out about some of the crypto exchanges and prosecuting, I believe, the CEO from Binance in another country. All kinds of stuff happening. Interestingly, note, tomorrow I'm scheduled, hopefully it works out, I'm scheduled to interview Patrick Smith, who is the main host of the Anarchist. You can definitely check out Anarchist on YouTube. It's ANARCHAST. Okay, Anarchist. Patrick knows Roger Ver. He's interviewed him in the past. And I'm going to get Patrick's take on what's happening with that case, what's the deal with Bitcoin and the rest of the crypto market. And I won't immediately air it because I'll have to definitely do some editing and stuff. I'm going to try and get it out early next week. So it's another reason why you should subscribe, because that won't be one of the live shows. I'll probably release it probably afternoon, evening, one of the days next week. So definitely be subscribed on whatever platform you choose to watch or listen to content on. All right. So that's really it. That's all I really got in terms of, crypto market and the casino and whatnot. I really think gold is going to continue to be strong here. And so, if you're continuing to make decent money, if you actually have some disposable income or some investable income, I would definitely look to gold and silver as a place to be. Look, I'm a big believer in metals. I think, they're actually something, right? In fact, I know there's something because I can touch it and feel it. And because of that, I'm inclined to put some of my assets and my work toward those things and expect them at least to retain some level of value. Can't go wrong buying gold and silver in my mind. You can if you're impulsive and you buy the top and it's ridiculous premiums. But again, you're listening to me and probably other programs like me, so you're ahead of the game. So I trust that you won't fall too bad a victim to that. But with that being said, that's all I got. It's Wednesday, middle of the week, hump day. We're on the tail end of it, which is great. So we're in the second half of the week. And I will be back here tomorrow at noon to talk about whatever else comes up in the markets. And we'll see. I don't know. Could be some fireworks recently. This definitely seems like the calm before the storm. Like when markets are just kind of like undulating back and forth like this, especially with some of the economic numbers coming in that have disappointed recently, and people dealing with expectations versus reality. A lot of times things can go boom about now. So I'm fully excited. Last week we had a bank failure on Friday. We'll see what happens at the end of this week. But one thing's for certain, I will be here live to talk about it tomorrow at noon. So I will see you tomorrow at noon. I want to thank you all for your time, your attention, your energy. I appreciate every single one of you. Peace.
Stuck in a system that just ain't right. Gonna tear it down. Gonna start a fight. spirit. Watch me grow.